5. Let's see.
Most economists do think that inflation is more likely to trend lower, that we're more likely to have disinflation than, say, hyperinflation over the next couple of years. But those supply chain issues do cast a cloud over some of those expectations. Now, with the pound, I think it's not really going to be inflation. That's the big trigger. It's these Brexit talks. And last night, again, we saw these breaking down, at this time over truckers' rights, the EU saying that the UK is asking for just too much. But I think over the months ahead, if we don't get a deal, if we don't have some sort of compromise on the trade issue between the UK and the EU, sterling could be really quite vulnerable.
Yeah, much potential for volatility, it would seem. Jane, thanks very much. Stay with us. Jane Foley from Rabobank with us.
I opened new position for euro at 119.35.5, short position.
Fairly flat this hour. We'll discuss that next. This is Bloomberg. Welcome back to the European Market Open this Wednesday morning, 11 minutes into a trading session that is flat to negative. We're just down 0.1% on the FTSE 100, even flatter than that on some of the other major markets here in Europe. Let's get a Bloomberg Business Flash. Some of the top corporate stories that we're covering here on the Bloomberg terminal. Maersk has raised its full-year outlook. The world's largest container line says profit for 2020 will be between $6 and $7 billion, but the company's CEO, Soren Skou, says that doesn't include the possibility of a second phase of lockdowns. The company was able to stay open for business throughout the crisis, but warns uncertainties still remain. German utility giant RWE is planning to raise up to 2.1 billion euros in a share sale. The new stock represents 10% of its market value. Depending on the pricing, it could be the biggest spot offering of new shares in the region this year. RWE is hoping to use the money to expand its renewable energy operations. Amazon plans to make it harder for merchants to ship products themselves. It means that they'll be more likely to pay the company to handle the task for them. New shipping rules mean sellers will have to honour 1- and 2-day delivery pledges. If they can't, they risk losing a coveted Prime fast shipping badge. That is your Bloomberg Business Flash. Now, the dollar is holding at its lowest level in some 2 years after a 5-day losing streak.
Stop on profit for euro at 133.5.
With us, and Jane, I'm going to give you the impossible task of telling me the definitive driver of weak dollar right now, because every day I read new contributing factors. I mean, negative real yields, is that at the heart of it? Is it this push higher we've seen in inflation, very small by global standards or by historic standards, but still relative to March, a slight push higher in inflation and the low yield environment? Is that at the heart of it? What's the real driver?
You know what, I think there's various factors all coming together. Negative interest rates are certainly part of it. I mean, it is unusual perhaps in the US to have negative interest rates, but we have had it before. But I think this time, because nominal interest rates are so low, there is this perception that yields or interest rates could be negative for perhaps a more protracted period. But I think the whole the whole inflation argument is a really, really interesting one. I mean, already today, of course, we saw that stronger than expected UK CPI index. The economists are not of the view, particularly, that we are going to see a lot of inflation because, of course, we are expecting to see higher unemployment levels. We've got pressure on wages, etc. We don't think that producers are going to be in a position to push on higher prices. And also, of course, for decades now, we've seen real problems in the developed world to push wages higher. So that's the economist's point of view. But, of course, many people are taking a different stance. Look at gold price, for instance. That is linked to negative interest rates, negative real interest rates in the US, and also expectations that we could see asset price inflation push higher in the way that we did after the QE was initially used in the US during the global financial crisis. So a really broad debate about inflation over the next few years, and that certainly is part of the factors impacting the dollar. But a Democratic president and potentially another pressure on the US growth outlook, it tends to bring more regulation and higher taxes. So a big variety of reasons. But I think right now we have a lot of momentum behind this dollar weakness. Come September, I think we could have a correction for some of the losses that we've seen.
It's interesting, isn't it? Because taking all you've said there, Jane, and then asking the question whether the dollar is still the haven, it certainly was during March, and every time you raise doubts about the dollar as a haven, it proves to be one. Once again. So I'm mindful of that. But I was reading Stephen Roach's piece some months ago talking about a 35% drop in the dollar versus a basket of countries that the US trades with. That was his expectations, 35% drop. And he was talking about how the poor savings in the US and the current account problems would eventually undermine the dollar. They'd push up the yuan, push up the euro, and the dollar would fall. Is that something that in the end undermines the dollar as a haven, or no, do we not get there?
You know what, I don't think that we do get there. At least if we did get to a scenario like that, it could be several decades out. And the reason for that is that the US dollar is still the dominant currency of the global payment system. And although there have been attempts by perhaps China to try and alter this, even the EU have tried to put some momentum in place to try and alter this, it's going to take a very, very long time to change this. People need dollars. They need dollars to finance their debt. The amount of dollar-denominated debt issued by foreigners has been growing since the global financial crisis. And of course, dollars are the big currency for transactions. Now, that is really quite interesting. There's some research by the BIS, I think it was published in December, that suggests that the currency that invoices are issued in is a real significant factor between which currencies that the central banks have in their reserves. And that cannot change very, very quickly. So I think the dollar will remain a safe haven, irrespective of its current account and budget position, really for some time, for some decades. And again, this is a function of the intrinsic characteristics of the dollar, its use in transactions, its liquidity, more than the intrinsic qualities of the US economy.
Yeah, I remember being recently quite surprised at the number of Chinese businesses, or rather the scale of the use of the dollar in trade by Chinese businesses, regardless of the fact that the Chinese government, of course, wants to push the yuan as a trading currency. Let me ask you about what you foresee then for the dollar. So it would take decades for that kind of scenario to develop that I put to you there from Stephen Roach. But I've read interesting thought pieces also about how Americans do seem to be preparing for a weaker dollar, maybe just a slightly weaker one. But if you look at what Warren Buffett is doing with gold, or the rate at which Americans are now buying housing, some people were suggesting that this was all about preserving wealth. Do you see any of those signs, Jane?
Well, I think if you were worried about inflation, and of course many people are, then that would be the move to go. If you look in housing, that's a hedge against inflation. Gold is traditionally a hedge against inflation. And I think many people are concerned about the characteristics that we did see after the global financial crisis. We saw a lot of money being pushed into assets, intrinsic assets, not just housing, but also, of course, classic cars. We saw art, for instance. All of these assets really did push higher, and this of course related to very, very cheap money. And now that interest rates have turned negative, or real interest rates have turned negative, there is the possibility that we get another boost to these asset prices too. So again, given what we saw after the global financial crisis, this certainly is a risk.
Jane, thanks so much.
I'm moving down my stop and profit. It means up in profit, yeah, to 119.30.5. Okay. So if it's closed at this level, we'll have around we'll have £500 in profit.
Welcome back to the European market open. 22 minutes into Wednesday's session, down 0.25% on the Stoxx 600, but that's certainly not the whole picture. We've got travel and leisure stocks actually outperforming today. Some of the UK-listed airlines trading higher, and perhaps this is around the possibility of testing at airports. We're getting some lines coming through from the Health Secretary in the UK on that subject. We'll bring you more on the markets shortly. Oil prices have eased from a 5-month high after a report signalled US gasoline stocks are surging. It comes ahead of a meeting of OPEC and its allies to assess its supply agreement. Joining us now for more is Anne-Marie Hordern. Good morning, Anne-Marie. What is going to be on the agenda then for OPEC and friends?
Good morning, Anna. Well, I think it's very clear this morning that top of the agenda is going to be compensation, bringing those cheaters on board. And this really comes very clear from the kingdom. Saudi Arabia's King Salman has called Nigeria's President Muhammadu Buhari this morning, and they discussed the importance of compliance. So the Saudis are making it very clear that they will not tolerate cheaters for very long. This has been the agenda really for Russia and Saudi Arabia since they were really bearing the burden of these cuts. And it's not just complying with the cuts that are, you have to do exactly right now for this month. They also want them to, in a way, atone for their past sins. So making up compensation cuts for the past ones that they have missed. For Nigeria, they are lobbying to count one of their oils as a condensate instead of a crude. That might help them bring into line. Iraq, for their part, they have been doing better in terms of compensation. They've implemented about 80%. So for the Iraqis, it's been probably the best we've ever seen. But as Halima Croft says, compensation may be just a bridge too far. This is 100% wise. This is a country that is still dealing with a very dire economic outlook. They are still dealing with the effects of war and sanctions. So for the Iraqis, it may be a bit harder, but it is clear that compensation and getting cheated in line is on top of the minds of the kingdom, as well as the likes for Moscow.
Yeah, so top of the agenda is going to be whether those who've not been playing.
Position closed on euro at 119.30.5. £500 in profit.
We just heard from the IEA last week, and they dropped their second half outlook by 500,000 barrels due to the depressed air travel. Yesterday, of course, we saw what you mentioned earlier, Anna, that U.S. report of surging U.S. gasoline stockpiles. So motor fuel, that is surging. And Amrita Sen is saying they need to remain vigilant if they want to be able to have control on this market. At any point, you can have a demand pullback. So it's going to be a balancing act. These are shaky times in terms of the demand, and that is why we are seeing this maximum pressure campaign for every country to make sure they are complying at 100%.
Okay, Anne-Marie, thank you very much. Anne-Marie Hordern with the latest on the oil story. And we are a little bit weaker, as we've been saying, for oil prices. So the Brent price, $45 a barrel, down by 0.9%. WTI, 42.54, also down by a similar margin. Let's take a look at some of the stocks on the move today. RWE is in focus, the biggest loser on the Stoxx 600 after the German utility giant priced its share sale at €32.55. It wants to invest in renewables, of course. So that announcement about the share sale came yesterday. Maersk in the shipping space climbing, that stock really climbing after the world's largest container liner raised its full year outlook, gave quite a positive story to the markets, and the stock is up by 5.5%.